One of the hard parts about being a dividend focused YouTuber is trying to appeal to the many different kinds of dividend investors out there.
Why are there so many?
Well, in my attempt to do just that, welcome back to the Power 5 Stocks of the Week. In this series, each week I present you all with the top performers in the following categories: dividend yield, dividend streak, dividend growth rates, 10-year returns, and the stock trading the highest percentage off of their 52-week high. All of these stocks will still have an ex-dividend date of next week, and generally the only requirements for this list is that you have to beat the S&P 500 over the past 10 years and have a dividend streak of at least 5 years, but for some reason that bar was too high for this week's list.
Maybe your expectations were too high.
This week there was only one stock that met those three simple metrics, and I didn't want to do a video just talking about one stock, so I'm going to note which one beat the market and which ones did not. If you're looking for a new take on a top 5 series, make sure you tune in each week. But now let's dive into this week's list.
And here it is. Here we go.
So this week's stock with the highest dividend yield is also trading the highest percentage off of its 52-week high. That stock is PNC Financial Service Group, stock ticker PNC. PNC is a quarterly payer in the financial sector, paying $6 per share per year with a forward dividend yield of 4.92%. PNC has been paying and growing their dividend over the last 13 years. They have a 3-year dividend growth rate of 10.9%, a 5-year dividend growth rate of 16.47%, and a payout ratio of 40.28%. At the time of recording, PNC was trading 35.37% off of their 52-week high. PNC has an ex-dividend date of April 17th and a payout date of May 2nd. And a single $10,000 investment into PNC 10 years ago while only reinvesting dividends since then would have turned into $24,288.84, which is a 9.28% year-over-year return rate. But that's compared to the S&P 500 that turned into $31,533.14, which means you would have been $7,244.30 better investing in the S&P 500 in the same time. And if you're the type of investor that loves long dividend streaks, you're going to love this stock. This week's stock with the longest dividend streak is Colgate-Palmolive, stock ticker CL. CL is a quarterly payer in the consumer staples sector, paying $1.92 per share per year with a forward dividend yield of 2.54%. CL has been paying and growing their dividend over the last 60 years. They have a 3-year dividend growth rate of 3.01%, a 5-year dividend growth rate of 3.28%, and a payout ratio of 56.54%. CL has an ex-dividend date of April 20th with a payout date of May 15th. And here's where CL falls a little short. A $10,000 investment into CL 10 years ago while only reinvesting dividends since then only turned into $16,196.11, which is a 4.94% year-over-year return. And again, that's compared to the S&P that in the same time frame turned into $31,533.14, which means you would have been $15,337.03 better off investing your money in the S&P 500. Really quick, please take a second to like the video as it helps other dividend investors find this video and the channel. Also, let's try to get these numbers a little bit more balanced out, as we have 66.5% of you that watch the channel that do not subscribe. Subscribing is free and it's a great way to make sure you don't miss any future uploads. Lastly, let me know down in the comments if there's any different categories that you tend to gravitate to, what they are, and why you tend to gravitate toward them. Now, let's get to the final stock that was the only one that met my criteria for this week's list. So this week's stock with the best dividend growth rates also has the best 10-year returns, and that stock is Zoetis, stock ticker ZTS. ZTS is a quarterly payer in the healthcare sector, paying $1.50 per share per year, with a forward dividend yield of 0.89%. ZTS has been paying and growing their dividend over the last 11 years. They have a 3-year dividend growth rate of 24.96%, a 5-year dividend growth rate of 25.08%, and a payout ratio of just 24.76%. ZTS has an ex-dividend date of April 17th with a payout date of June 1st. And finally, we have one that beat the market. A $10,000 investment into ZTS 10 years ago while only reinvesting dividends since then would have turned into $54,968.57, which is an 18.58% year-over-year return rate. Once again, compared to the S&P that turned into $31,533.14, which is a difference of $23,435.43 over the past 10 years. As mentioned this week, only one of these stocks has beat the market over the past 10 years, but all of these stocks still have a dividend streak over 5 years and go ex-dividend next week if you choose to make the purchase. Let me know down in the comments if you guys even care if your dividend stocks beat the market. And if you missed it, check out the video I just posted right here. that outlines one of the best dividend lists out there in the champions, contenders, and challengers. But until next time,